Holy smokes, everyone. What an absolutely crazy day it was for the Chinese markets today. For those who don't know, the markets in China absolutely plummeted today after a release of a new critical piece of information that shows how bad things really are. Because people in China, it's very hard to trust the data, so what you have to do is follow the money. And guess what? The money is running scared. So everyone, exactly what happened in China today, what caused this big crash, and is it going to get worse, and could it affect us in the West? Let's not waste any time. Let's get straight into it. Okay, everyone, look at this. Chinese stocks dropped more than 3% after data shows China's producer inflation is surging. Now, people, why this is happening in China? We have to pay attention to this in the West because remember, China is the factory for the world. So if costs are skyrocketing in China and for China's producers and factories, guess what? They're going to pass over those costs to us in the West. That means more inflation for us, which is going to be bad news for interest rates, which I'll get into later in the video about how they are absolutely skyrocketing out of control. But what you're probably wondering is, okay, what exactly happened with this data? Well, listen to this, everyone. China's producer inflation for March was much higher than expected. The producer price index surged 8.3% as compared with a year ago. That is well above the expectations for a 7.9% increase in Reuters poll. People, you need to understand the situation we're in right now. We're not just experiencing high inflation in the US. We're not just experiencing high inflation in Europe. This is a global phenomenon going on right now from the most dangerous monetary experience we have witnessed in history of 2020 by lowering interest rates to zero, by doing massive amounts of central bank stimulus, and then also massive amounts of fiscal stimulus, and then not turning the money printer off, not taking the punch bowl away when things were going good. They kept printing and printing because they wanted to inflate the bubble higher. But now we're paying the consequences with much higher inflation. Because look at this, as we can see here, Shanghai fell 2.6% today. Hang Seng Index, the Hong Kong Stock Exchange, was down much worse, down 3.03%. Now again, I want to reiterate, the reason why we have to pay attention for China is because they are now a much more significant player in the global economy compared to a decade ago. And what's happening in China right now? After 2 years, they're still going into full-on strict lockdowns, and this is going to make the supply chain issues worse. And like Elon Musk tends to say, if they don't make stuff, there's no stuff. AKA, there's no stuff to buy. And how this can affect the US companies and US stock market is, for example, Tesla had to shut down their factory in China. Apple may have to shut down some of their production, and this could affect some of the big high-flying tech stocks. And this is all happening on top of why they're in the midst of a property market downturn, which supplies up to 29% of their GDP, and up to 70% of Chinese wealth is tied up in real estate. So like I've been talking about on the channel extensively now, people, I feel like something very bad is going to come out of China, but I don't know exactly what because they're not very transparent with the data. But I don't think we will know exactly what is happening until something in their financial system breaks and it makes headlines. Now, people, I am starting to get very, very worried with the rate at which interest rates are going up. Look what's happening with the 10-year US Treasury. Today, it hit 2.78%. We are almost going to hit 3% interest rates on the 10-year US Treasury, and we're not even in May yet. Just look at this chart, what's happened with the 10-year US Treasury yield over the past year. We can see here it is accelerating at a rapid pace. Now, a lot of these higher interest rates have already been priced into the markets, but what I don't think the markets are fully priced in yet, and something that I would start to get a bit uneasy about, if the 10-year US Treasury goes above 3.5%. That could equal 6% mortgage rates, and like I said in my previous video, that would be the point where we'd finally start to see house prices fall. So that's what's happening in China, but let me explain how this is going to affect the markets in the US. Like I've already gone over, higher inflation is going to lead to higher interest rates, and higher interest rates is bad for stocks and bad for real estate. So in order for us to know what will be a good investment is, we have to know what interest rates will do. In order for us to know what interest rates will do, we have to know when inflation is going to finally start going down. Well, look at this, everyone. Economists boost their inflation expectations in a worrying sign for the Fed. The Bloomberg monthly survey shows high US inflation into 2023. So that's right, everyone. We've got transitory inflation, but it's transitory for a decade. Consumer spending, growth seen slowing, raising recession risk. So this is how high inflation can affect the economy and affect the markets. Because if prices go up on consumer staples, then that means people have less money to spend on discretionary items. And if a lot of high growth tech stocks earn their money or earn their revenue from discretionary spending, well, that's going to affect their earnings and affect their stock prices. And with the yield curve inverting, with consumer sentiment falling, with people's credit cards getting close to maxed out, and no more stimulus coming to save the day, a recession is looking all but imminent right now. And like I've been saying on my previous videos, we could very well be in a recession right now, but we won't know it until we get the 2 consecutive quarters of GDP data. But you know what's really worrying me the most, people? This. Look at this, everyone. This is the Global Food Index. Now, what we can see over here is in 2007, it hit an all-time high of around 175. But now the FAO Food Index, look at the blue line here. It is going completely parabolic. It has just hit 250. So we are almost going to double what food prices were in 2007. And we've really just seen the food prices start to accelerate in the last 6 months. What we are witnessing right now is the absolute decimation of the middle class. People simply aren't going to be able to afford these increasing costs. Food costs are going up 20 to 30%. Rents are going up 20 to 30%. Gas prices are going up 20 to 30%. Energy, utilities. The middle class right now is at breaking point, and it's looking like we're going to enter into a 2-class system of the super rich and the poor, and the have and the have-nots. But the reason why this worries me is because eventually people hit their breaking point, and once they lose everything, they lose it. And the old saying, society is only 9 meals away from anarchy. So that brings the question, and that's the question they're asking in this article: where will the food riot start? Because do you think the middle class is going to go down without a fight, especially when billionaires are increasing their wealth at a rapid pace? No. And what I'm worried about, this is going to lead to social unrest. And we're already starting to see this in countries like Sri Lanka, Lebanon, Turkey. People are struggling to be able to afford basic essentials. But all this food inflation is now coming to the West, and we're seeing the standard of living that people in the West have experienced, which has been great over the past 40 years, well, that is now declining rapidly. What I think we're going to see is a homeless crisis we've never seen before. Look what's happening with the US with these tent cities. It is literally getting worse and worse. And this is no surprise when rents are going up 30%. But what you're probably wanting to know is, okay, what does all this economic jargon mean for me in simple terms? What this means, everyone, we're seeing a lot of unease in China right now. Their economy is going down, their markets are going down, inflation is getting worse, and this is going to impact us in the West. We're seeing in the US, inflation is getting worse, and this is going to lead to higher interest rates. Now, for us investors, the markets have already priced in the Federal Reserve lifting interest rates to 2 to 2.5%. But what they haven't priced in is if the Fed has to lift interest rates above 3% or 4%. And that is why, even though I've been buying in the markets, I've deployed 40% of my cash right now in case of a melt up where the Federal Reserve does a lot of talking, but they don't really fight inflation, and we have this 20-30% inflation. Well, I don't think the markets are going to go down in dollar terms. So that's why I've deployed my money in the markets into things like gold, silver, Bitcoin, and stocks. But on the other hand, if inflation does get worse and the Federal Reserve does actually get serious, if interest rates go up much higher, well, then I've got lots of cash there, and I'm actually hoping prices go down so I can deploy the rest of my cash into the markets and get stocks, cryptocurrencies, and gold and silver on a big discount. So we are really at a critical point in time in these markets right now for the economy, and it all comes down to, will central banks do their job, or will they just do more talking and let inflation run hot? Unfortunately, I don't have a crystal ball, so only time will tell, and we'll have to monitor to see how their language changes and see if we can get any hints in a change of tune in the next meetings. And don't worry, I'll definitely keep you updated when they do. So everyone, that was just a quick update with what's happening in China right now, with what's happening in their markets, with what's happening with inflation, some things we should think about right now. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you want to get up to 5 free stocks with Moomoo, I'll put a link in the description. Thanks for watching. I'll see you all in the next video.